If you're going to Medicare soon, there's probably a couple different terms that you've heard before that you're not familiar with. And that's what we're going to talk about in these next few moments that we have together. Hi, I'm Jackson Taylor, and this is your T65 Compass. And I'm going to go over these different terminologies that you need to know as a Medicare beneficiary. So these are terms that you're going to need to understand in order to make an educated decision on what your Medicare option is going to be. Now, before I jump into this video, before I jump into this information, I do want to say nothing replaces talking to an agent about what your decisions are, what your options are. So please follow the information in the description of the video below to talk to one of our highly trained agents today about your Medicare options. Now, to the video, to the terminologies that you need to know. I want to talk about different terminologies that will help you understand how Medicare works, and then it'll help you understand your options and what you need to get into, and then it'll help you understand how the government's involved in Medicare. And then we are also going to talk about some terminologies that will help you understand your enrollment options as well. So when I'm talking about Medicare terminologies that you need to understand, the first ones that come to my mind are cost share terminologies. And cost share in itself is a terminology when we talk about health insurance. The term cost share is the term that describes your relationship with the company or the insurance company on who takes on what cost in this relationship here, right? You have the insurance company and you have you. When we're talking about Medicare, more specifically, we have Medicare and we have you, the beneficiary. So cost share is just a term that defines how the cost or the share of the cost is going to be divided. That's the easiest way to say it. So cost share is the share of cost, how it's divided. And it's broken up into a couple different terms here. These are the top five, if you will, that you're going to run into with any kind of health insurance, but even with Medicare. And I know that specifically you're watching this because of Medicare. The first cost share term that we see used the most often is going to be deductibles. And to define that very easily for you, that is just the amount that the insured has to pay before the insurance company will pay a dime. In other words, this is the amount that you have to pay before Medicare will pay anything, right? So if you have a $10,000 deductible on your car insurance, you have to pay $10,000 out of your own pocket before your insurance company will pay anything. Typically, you don't see $10,000 on car insurance. You do see it on health insurance a lot of times. But the good news is when it comes to Medicare, your deductibles are usually pretty low. You have a Part A deductible, it's a little over $1,700, and then you have a Part B deductible for medical that is $283 for this year. Now that goes up every year. We see those deductibles change. We've seen them go down before, but they typically do go up. But that means, let's talk about the medical deductible for a moment, that if you have a $283 medical deductible, you have to pay $283 out of your own pocket before Medicare will pay anything for a medical service. So when you see the term deductible, just think that is the initial amount of money that I have to pay before my insurance will pay anything. It's not the amount that I have to pay before insurance covers everything. That's not what that means. It's the amount that I have to pay before insurance will pay a dime or a cent towards any of my services. And then we go into our more common cost share after that. These are this is where a share of the cost is actually happening, right? Deductible is your share. You have to pay that up front before insurance will pay anything. But then we have a copay. A copay is a flat rate that is in your documents. It's in your insurance policy. It's a flat fee that you have to pay for a certain service. For example, if I have a $25 copay for doctor's visits, I have to pay $25 when I go to my doctor. If I have a $250 copay for a surgery, I have to pay $250 for that surgery. Now, the reason we call this cost share is because, to be quite frank with you, a surgery doesn't cost $250. Your copay requires that you pay $250. But at the end of the day, that surgery is going to be a couple $1,000s, which means that Medicare is going to pick up the remaining balance, or Medicare Advantage in that situation specifically. Now, when it comes to copays, original Medicare doesn't really have that many copays. There are copays for hospital stay once you've been in there for quite a bit of time. But typically, copays are going to be on Medicare Advantage plans. And the copays that we're going to see are going to be copays, like I mentioned, doctor copay, which is typically zero. We have specialty copay, which is somewhere around 35 to 50. We have surgery copays, which is around $250. There's a whole slew of them. But when you see the copay term, you know that means that it is a flat rate that you have to pay for that specific service. Then that takes us to coinsurance. This is, again, another balance here between you and the insurance company. This is the same thing as like copay as far as sharing the cost in that moment, but this is a percentage rather than a flat rate. So copay is a flat rate that I have to pay for a service. Coinsurance is a percentage that I have to pay for a specific service. So when I think of the term in coinsurance, I think specifically on Part B of Medicare. I have an 80-20 coinsurance, which means that Medicare pays 80% and then the beneficiary has to pay 20%. And you can see that that can be alarming because if I have a 20% coinsurance, there's no cap there. It's really easy to predict a copay because it says this is the fee that I'm going to pay. Coinsurance is a percentage. If I have $100 surgery done, then cool. My coinsurance is going to be $20. I got to pay $20. If my surgery is $100,000, well, if I have a 20% coinsurance, I'm going to pay $20,000. So it's very important that you understand these terminologies when you're reading into them and trying to understand them. And then this brings me into the final two I want to talk about when it comes to cost share. That's MOOP and TROOP. MOOP is one that's very commonly used across all types of insurance, health insurance, specifically, and then Medicare as well. Mostly Medicare Advantage because original Medicare doesn't have a MOOP. Medicare Advantage does. This stands for maximum out of pocket. That's what MOOP stands for, maximum out of pocket. So when you're looking at a plan, you're selecting a plan, and the agent or the document says MOOP, you need to understand that that is the maximum out of pocket, which means that's the maximum you as the beneficiary will spend out of your own pocket on services for that year. If I have a $10,000 maximum out of pocket, $10,000 is the cap that I would spend towards medical and hospital services. Once I reach that out of my pocket, the insurance company would pay 100% from there on for that year, that calendar year. So let's break this down a little bit. I have deductibles. If I have a $2,000 deductible, which typically you don't on a Medicare Advantage plan, if I have a $2,000 deductible, I pay $2,000 for my services. And then let's say I have a coinsurance, and that coinsurance takes me the rest of the way to $10,000 out of my pocket, right? I'm paying 20% of my services, and maybe I start taking some kind of treatment, like a cancer treatment, chemotherapy, and I end up spending $10,000 total out of my pocket between these cost shares. My MOOP then kicks in, and the insurance company would take over and pay everything 100% at that point. So MOOP is a really good term. We like that term. It means that there's a stop loss. And then we have TROOP, and this is one that commonly gets misused in the Medicare space. TROOP is specific to Medicare. You don't see this term anywhere else. It's only for Medicare, and this is my true out-of-pocket. Medicare drug plans, both prescription drug plans and Medicare Advantage plans, anything that covers Medicare or drugs on a Medicare from a Medicare space is going to have a TROOP. This acts a lot like a MOOP, but it's not. It's only for medications, and it's a true out-of-pocket. This is a combination of what I, the beneficiary, have spent and the insurance company has spent on my prescriptions. Once I reach that TROOP, then the insurance company pays 100% on covered medications. Sounds a lot like a MOOP. It is a little different. It's only for prescriptions, and it is a combination of what I've spent or what you've spent and the Medicare plan has spent. And for this year, the TROOP for all Medicare drug plans is $2,100, and that is going up next year in 2027. So those are your cost share terms that are very common. Next, I want to talk about some acronyms that you've probably already heard, you've already seen, and you're going to continue to see in the Medicare space. The first one here is IRMA. This stands for Income-Related Monthly Adjustment Amount. And this term is used almost like as a chart. It describes a chart out there that determines how much your Part B premium could go up based on your income. For 2026, the standard Part B premium is $202.90, but that could go up if your income is higher, right? And if you and your spouse are jointly, that could play a factor into it. And there's a full chart out there. I'm not going to dive into the specific numbers, but technically my Part B premium, what I pay for the medical part of Medicare, could be higher due to IRMA, the Income-Related Monthly Adjustment Amount. So if you see IRMA, you know that that's talking about your Part B premium adjustment. The next one we have is MACRA. This is the Medicare Access and Chip Reauthorization Act. This is an act that was introduced a long time ago, but officially passed in 2015, or not passed, rather it was revisited in 2015. This is what standardizes Medicare supplement plans. There's some other things that are involved in this act, but mostly this is for the standardization of Medicare supplements. When we're talking about Medicare in general, that's where the term comes up a whole bunch. You see, Medicare supplement plans, lettered plans, have different functions, but a Plan G is a Plan G. So if a plan letter is the same, it doesn't matter what carrier you go with, it has to operate the same. A Plan F is a Plan F, whether you go with company A, B, C, X, Y, Z. A Plan G is a Plan G, whether you go with A, B, C, X, Y, Z, and Plan N is a Plan N, whether you go with company A, B, C, X, Y, Z. It doesn't matter. Any carrier I go with, that plan has got to function the same way, and that's because of MACRA here that comes in and standardizes those different plans. And then I have IRA and IRA as my next one. The reason I put this is because this is two acronyms that you'll see commonly in your Medicare journey. The first one I'm going to talk about is the Inflation Reduction Act, the IRA, Inflation Reduction Act. This is an act that was passed officially in 2023, or took effect in 2023, and added a copay to insulin. So it was a $30 copay to insulins in the year 2023, meaning that all insulins that were covered by a Medicare drug plan had to be a $30 copay. It couldn't be more than that. And then in 2025, this is actually the act that added our troop that we just talked about. So the troop that we talked about on drug plans was added by the IRA. So when you hear an agent talking about the Inflation Reduction Act or the IRA, that's what they're talking about. They're talking about an act that has been put in place and really affects or aims to affect and help the cost of medications for Medicare beneficiaries. So that's the Inflation Reduction Act. And then I have IRA. This is Individual Retirement Account. Now, you hear this acronym used a lot in Medicare because many of you have some kind of retirement account. You may have an individual retirement account, or you may have an employer retirement account, something like a 401k or a 403b, whatever that looks like. But IRA is something that you will hear a lot of. Individual retirement account is because you got this on an individual basis. You didn't get this through your employer. Maybe you went to a broker and got an individual retirement account. That's an IRA, and it's commonly used in the Medicare space. And I wanted to put these two beside each other because they're both IRA. You can hear them in different contexts. When you're hearing about the act that affects drug costs, that is Inflation Reduction Act. When you hear someone talking about a retirement account in the IRA, that is Individual Retirement Account. Next, I have SSI and SSDI. These are very similar. They're almost the exact same thing, just one letter difference here. We have Social Security income and then Social Security disability income. And they are different things. They are separate. They are the same, but they are separate. One is for somebody who's going to Social Security because they've aged into Social Security. The other one is Social Security because of disability, and there are different rules there. Matter of fact, they draft on different dates, and there's different rules that come into play for maybe getting Medicare before 65. If you're somebody who's been disabled for 2 years or more, you could qualify for Medicare at that point, even if you're 30 years old. But you have to have been drawing Social Security disability income, SSDI. So there is a slight difference there. And that brings us to our final group here. These are enrollment codes that you will be seeing going forward. These are enrollment codes that you need to understand as a Medicare beneficiary, and you'll see all these different letters used together, and you're going to wonder what means what. I'm going to explain it right now for you. First, we have IEP. That stands for your initial enrollment period. This is the time frame that I can enroll into a Medicare plan for the first time, and that is a 7-month window. So it's 3-1-3, which is a 7-month window that I can enroll into parts A, B, C, and D of Medicare. That's when I can do that for the first time. Once I use my IEP, I can't use it again. Now, to be very clear, I can use IEP. This is when I can enroll into A and B. If I enroll into A and B, I can still use it for Part D or Part C. But once I use it for Part C or Part D, which is Medicare Advantage or prescription drug coverage, I cannot use that again. But that is what IEP stands for, Initial Enrollment Period. Then I have AEP. This is the time frame that you need to keep in mind for the rest of your life. This is October 15th through December 7th. October 15th through December 7th. This is the time of year that I can make changes to my Part C or D plan. Like if I have a Medicare Advantage plan or prescription drug plan, I can make changes during this time of year. I technically can make changes to A and B as well, but the only change I can make is disenrolling from A and B, and that's just not going to happen. But October 15th through December 7th, that's when I can change my plan. So you need to be on the right plan, and you certainly need to know when AEP is. That's your annual enrollment period. That's when I can make changes. Then I have OEP. This stands for open enrollment period. Not to be confused with the health insurance open enrollment period that you maybe have at work. This is the Medicare open enrollment period. And this is January 1st through March 31st. This is originally called the Medicare Advantage disenrollment period because originally this was designed to help people disenroll from a Medicare Advantage plan. But then over time, people started making changes where they were just changing from one Medicare Advantage plan to the other. So the term was changed to OEP, open enrollment period. This is when I can make a change to my Medicare Advantage plan. Maybe I got one in AEP and I don't like it. I can make a change here. Maybe I've had one for a while and I decide I don't like it. I can make that change here. I cannot use it for any other type of Medicare coverage. It's only for Medicare Advantage plans. And then I have SEP, which is special enrollment period. Maybe I'm not in one of these time frames and I want to make a change in my plan. Well, I would have to qualify for an SEP. I would have to have a special qualifying life condition that would allow me to make a change outside of these enrollment periods, and that would be a special enrollment period. Next, I have UW. You'll see that a lot. That is underwriting, and you'll see this in every health insurance space. You'll see this term used in every health insurance space. This is quite simply just a process of qualifying you as someone that the insurance company is willing to take on based off health, right? Based off health. There's underwriting for all different types of insurance, but when it comes to Medicare and health insurance specifically, they're underwriting your health. They're deciding whether or not your risk is worth them taking on based on your health. And this is something you need to be aware of because there are policies, specifically Medicare supplement policies, that you have to go through underwriting. If you're not in your next phase here that I'm going to talk about, you would have to use underwriting to enroll into one of those plans. So if you see UW, just know that is underwriting. And then we have OE. So this is not to be confused with OEP, but the letters mean the same. This is open enrollment. Up here we have open enrollment period, which is for Medicare Advantage plans. And then we have OE, which is open enrollment for Medicare supplement plans. This is a 1-year window, 6 months on either side of my Part B effective date, that I can enroll into a Medicare supplement plan with no underwriting required. Once I get out of that 6-month window on either side of my Part B effective date, I no longer can get into a Medicare supplement plan without using underwriting or GI, which is guaranteed issued right. And I'm going to explain that in a minute, but again, that's 6 months on either side of my Part B effective date that I can enroll into a Medicare supplement with no health underwriting. They have to let me in even if I have cancer or kidney dialysis, whatever, doesn't matter. And then my final one is GI, guaranteed issued. This is a term that can be used for a multitude of things. Guaranteed issued could be used for somebody who is getting a plan that doesn't require underwriting or any kind of enrollment period use. It's a guaranteed issued plan. But in the Medicare supplement space, GI in the Medicare supplement space is for somebody who did not delay their Medicare coverage, but they kept some kind of creditable coverage. And now at this point, they're going to Medicare and they want a Medicare supplement plan because you've had creditable coverage. You are actually going to be qualified to enroll into a Medicare supplement plan. The only thing is you can't choose which one you're going to go into. It either has to be a Plan F or a Plan G, depending on when you're enrolling. So when you see GI, that's guaranteed issued. That's a term used for a lot of different insurances, but for Medicare supplements specifically, it's for somebody who did take their Medicare, also kept creditable coverage, and now they're going to Medicare and they want a Medicare supplement. So that's a lot of terms out there that are used. There's more that we can think of. Ultimately, really what I want to say is you're not going to understand all these without talking to an agent. So what you need to do more than anything is after watching this video, go follow the information in the description of the video below so that you can talk to one of our agents today about these different terms and about your Medicare options. That's the most important thing, is talking about your specific situation so that you can get in a plan that's going to be good for you and your family. Listen, Medicare is a journey. We're a compass. Use it.